Hi, this is Ian Coleman from PIA-First. It's week 18th of June 2018. This is the video analysis for the FXMajors, including the dollar index. So basically what we're looking to do is break down through the time frames, highlighting formations, support and resistance levels, and also our bias going into this week. So we're starting off with the dollar index. It's actually the weekly chart. Our long-term target level or area is here, which is the trend of lower lows, possibly a bearish head and shoulders pattern. So this being the left shoulder, this being the head, then this being the neckline all the way down here, and forming the right shoulder soon. So 96, the figure, is the 50% pullback level from this sell-off. We've also got that trend line resistance coming around about 95.85 this week. Last week we spoke about an evening doji star formation, which gave a mild bearish bias. However, strong dollar buying this week, especially across euro dollar, has resulted in not this formation being taken out, but the dollar index moving back inside this this weekly Ishimoku cloud. So if we go to the daily chart here, we can see another reason why we believe we would get a stronger correction. We did highlight the fact that we had bespoke support at 93.50. We've got that strong buying pressure, obviously on Thursday after the ECB, and then a doji style candle near the high on Friday. So really, essentially, we need to break and close above this level around about 95.30 at the beginning of next week to continue this bullish bias. If not, then obviously to the downside we've got support at 93.50 and then again at 92.10. So if we go to the intraday chart, we've actually got some solid support that we also need broken to the downside for dollar bears to regain some strength. There's a Marabuzzo level located at 94.19, and then our bespoke support at 94 the figure. So that we believe that's going to be quite strong going into Monday of this week. And if we look across at previous price action, this was resistance, so it now becomes support to the downside. Reflecting that bias back onto the major currency pairs. Again, we had that reverse formation on the weekly chart in euro dollar. So we had a morning star formation. We haven't taken that low out as yet. Our long-term bias is still to the downside, so we're looking for a left shoulder, head, right shoulder to form, and then another move lower. At the moment, we've got bespoke resistance coming in at 117.19, and then we've not got support really until around about 112.09. So if we do see a break of this area, this 115, the figure area, then we're going to see a stronger move to the downside. One important factor here is the 13 count. It's a DMARC 13 count that was posted on the week 28th of May. DMARC indicators, or a 13 indicator on DMARC, normally highlights the end of a trend and at least a correction to the upside. Now, the way that you formulate a stop for these signals, if you like, and this is a suggested stop, it's not a system, but Mr. Peel, who wrote a book on DMARC indicators, highlights these as potential stops. And basically what you look at doing is you take the high and the low of the lowest candle, you then project that length onto the lowest candle to get the projected stop. So that's down at 112.90. So there is scope for a push through that support without actually breaking this 13 count. So at the moment, no man's land really for euro dollar. And if we go to the intraday chart, we can see here that we've got bespoke resistance at 117.14. So this level, if it holds to the upside, then we're expecting a deeper correction. If it breaks, then we're looking for a higher move up towards sort of 119 the figure, 120 the figure, which we've highlighted here actually on the weekly chart, which is our bespoke resistance levels. So at the moment, we're in between support and resistance, and really looking at day trades to try and get an indication of the long-term picture for euro dollar. Cable, again, it's not cut and dry really where we're going in this currency pair. We're going to look at the weekly chart first. Here we had a 5-wave count to the upside, stopped, stalled, gave us a bearish outside reversal candle on the weekly chart, and then moved to the downside. That was close to this 261.8% extension level at 142.11. Now, the Ishimoku cloud, which is quite deep, is offering support for sterling dollar. And also, if we go to the daily chart, here we can see a potential 5-wave count to the downside. We've actually got a DMARC 12 posted on Friday, so on Monday we should get a DMARC 13, which again highlights the bottom of a trend. We've got bespoke support located at 132.05, and then we've got this 261.8% extension level located at 131.76. So although the immediate bias, especially with this bearish outside candle posted on Thursday, is for lower levels, again, losses could be limited. We can't get a projection of a 13 count until that 13 count's been posted, but we're looking for dips to be bought into, and also rallies to be sold at the moment. So again, it's more of an intraday play than it is a medium-term play. 133.08 is our resistance level, and again, with that being previous support, it's quite a good resistance to the upside. Dollar Swiss, we posted a 13 count on the weekly chart. We've moved, we've tested and rejected the reverse trend line support at 98.21. We then seen strong buying action last week. Our bespoke support is actually at 98.03, and obviously levels down towards that, or price down towards that level have been bought into. Now there's only a mild word of caution really going into the beginning of this week, and that's this reverse head and shoulders. So we've got a left shoulder, we've got a head, then we've got a right shoulder, and the projected measured move target is very close to that psychological big figure, one the big figure. So we're expecting that to be a short-term barrier, at least for dollar Swiss going into this week. And if we come down to this time frame again, stalling around the 161.8% extension level, that upside could be limited to the downside. And again, it's really more of an intraday play now than a medium-term play. We've got reverse trendline support at 99.39. We've then got bespoke support at 99.32. So if we do get a sell-off at the beginning of the week, we're looking to buy into that dip for a move up to that one big figure to basically complete then that head and shoulders target level. Dollar yen, I suppose this is probably the most important time frame, if you like, for dollar yen. We're moving up within this channel formation. We've got a Marubozu level, which is the midpoint from the open and the close at 109.96, and that's quite important if bears return this week. And if we go to the 8-hour chart, we can see that we've got the potential of an ending wedge pattern. So that's the red lines here. We've got our support, trend line support coming in around about 110.18, and then bespoke support coming in at 110.09. So there is support to the downside, but with outside bars also posted on the 8-hour chart from the highs on Friday, the potential for the upside is probably pretty limited as well. So at the moment, and this is the daily chart looking for a different view, that we've got a bearish outside bar on the 8-hour chart. We've got a doji style candle on Friday, sometimes highlights the top of a trend. If we close below this level on Monday, which is around about 110.30, then that in turn will make an evening doji star and offer a downward bias. Now, trendline support is located at 109.11. A full ABC D formation from this level. So AB equals CD would take us down to 107.70, and we've got bespoke support at 107.54. So at the moment, mildly bearish, but only for a move down towards this level, and then we'd look for bulls to reappear in dollar yen. I'm only really showing one time frame on dollar CAD. We've broken this very large ending wedge formation to the upside. We've now got trendline resistance located. Let's just move that down a bit. That's a little bit too high, but going into next week it won't be. 132.64. So buying really this week is potentially limited. We prefer to buy dips. This is potentially another ending wedge pattern as opposed to this bullish pattern. This black ending wedge pattern is actually bearish, but we've got reverse trendline support at 130.29, and we've got our bespoke support at 130.15. So I say could be limited buying in dollar CAD, and if so, then we're looking at this reverse trendline support and bespoke support towards the beginning of the week to see if we get a bounce higher. But again, the medium term outlook is pretty mixed, really. Limited buying and probably a limited sell-off for dollar CAD for this week at least. Aussie dollar, we've been bears on Aussie dollar for quite a while. If we look to this chart, which is the weekly chart, we've broke the ending wedge formation to the downside. We've then retested again the reverse trend line resistance, holding quite well at 76.75, and then we've had this strong sell-off. 76.18 was our bespoke resistance. So normally we'd expect this continuation of weakness in Aussie to continue. Excuse me. However, the daily chart highlights a 13 count, again D-mark on Friday. Projected stop is 73.36. So the scope for limited downside at the beginning of this week. Actually, we've just adjusted our target level to 74, the figure for Aussie dollar. And if we go to this chart, which is the 4-hour chart, we've got a potential of a 5-wave Elliott wave pattern. So wave 1, 2, down in 3, small up in 4, and then down in 5. So we've got Tuesday's Royal Bank of Australia minutes coming out. So although the immediate bias is to the downside, it could be limited with this meeting early Tuesday morning, this 261.8% extension level, and also the projected D-mark stop at 73.36 and this 13 count. So the immediate bias is still to the downside, but the scope for limited selling in Aussie dollar this week. Euro sterling, real mixed bag. We were trying to buy dips in euro sterling last week. We didn't get the dips. In fact, it rallied up until Thursday, and then we obviously had that weak ECB meeting. We've moved again to the downside. The monthly chart highlights what we believe to be an ending wedge pattern. So we're getting towards support, which is at 86.80. The weekly chart, and this keeps our bearish bias alive, if you like. Levels inside the Ishimoku cloud are being sold into. Last week we got a bearish engulfing candle, potential pincer tops, if you like, on the weekly chart. But the most important factor here is the fact that 83.10, which is the 161.8% extension level, is close to our bespoke support, which is 83.15. So this bias, if you like, off this time frame is to the downside. With that in mind, and only with that in mind, we've got quite a decent resistance level now, really, on euro sterling if we get a bounce to the upside. Signals aren't strong, and I'm going to explain why in a second. So basically, this was the last sell-off. Then levels towards the 61.8% pullback Fibonacci level at 88.35 found sellers. We had that strong sell-off on Friday, but levels close to this trend of higher lows did find some buying on Friday. although it's been limited. Now we've got a Marabuzzo level at 87.69, and then we've got Bespoke's resistance at 87.73. So we are looking for gains to be limited at the beginning of the week, but we're going to have to monitor price action to see how far we're going to move to the downside. And the reason I'm saying that is because of these higher lows, and that's potentially making an ascending triangle formation that has a bias to break to the upside. So like I said, again, it's a bit of a mixed picture, but with 87.70 really the resistance level at the beginning of the week. Euro yen, long-term picture, again we prefer losses, and that's because we've got this 261.8% extension at level at 115.14, which is close to the previous swing low, which was made back in 2017, actually in April. We're in a bearish channel formation, but this last drive should have really been impulsive down to this 161.8% extension level, and it's not been. We've got bespoke support coming in at 127.83, and levels down there actually found buyers last week. We've got a doji style candle, or we've closed the week little net change, which highlights indecision. But if we go to this time frame, which is a daily time frame again, and we constantly looking at these Marabuzzo levels, I believe, at the beginning of the week to see whether or not this euro weakness can continue. We've got the Marabuzzo level from Thursday at 129.04, and then we've got our bespoke resistance at 128.90. So that's our prime short area, if you like. And if you look over to this side of the chart, you can see that that was support. So now it becomes resistance to the upside, and that's our prime short entry level at the beginning of the week. Again, the long-term picture is pretty mixed. It's really, I think, about short-term setups this week, but we will keep you informed if that changes or if there's any good risk-reward setups that we see. Okay, thank you very much. I hope you found that informative, and we'll speak to you again soon.